Hi, and welcome to this new live. Today, we're going to be talking about self employed mortgages, or more specifically, self employed mortgages if you've been self employed for less than 3 years. It seems to have been almost a pandemic thing that people have decided to set up mortgages, and I get more and more questions about people who have want to get mortgages who are already self-employed but haven't really done it for that long. The good news is there are options. So if you are really worrying at the minute about how you're going to apply or what you need, and you want to really do this without sort of shelling out any loads of cash all the time, then let me explain how this all works. We're going to get into that right now. So self-employed mortgages then, when you've been self-employed for less than 3 years, what do you need? How does it work? Okay. And like I said before, my name is Greg Williams, been a mortgage advisor for 15, 16 years, probably more than that now. So I've got a little bit of experience in this. So I'll let you know exactly what you need right now. And for some reason, we've got the same slide twice. We'll ignore that. So, understanding the basics. So, what is a mortgage? I'm sure if you're watching this, you already know this, but in a nutshell, it is the finance that you need in order to purchase a house. So, unless you've got the full purchase price, let's say you want to buy a house of £100,000, unless you've got £100,000, then you're going to need some sort of finance. That finance, when you're buying a property, is called a mortgage. Okay, so the importance of credit score and financial history. This is an interesting one, and I've put this right at the beginning because people get really confused with this and think you need an ideal or a perfect credit score, and you don't. Because if you did, then most people probably wouldn't be buying houses because not everyone has a great credit history, and it's especially when you start in a business, sometimes things don't always go according to plan and payments go out when they're not supposed to and money's needs being paid and whatever. Some things go wrong. So don't worry so much about your credit history. The important thing is you need to try and obviously stay on top of it. If you are planning to apply for a mortgage, then you need to make sure that things are paid and you're not going over your overdraft and not putting too much on your credit cards and that type of stuff. And there's something called debt to income, which I'll cover in a second. But yeah, just make sure you're staying on top of it as much as you possibly can to improve your chances. Challenges faced by self-employed individuals in getting a mortgage. There are a few, and there are a few more if you've been self-employed for less than 3 years. The obvious one is a lot of lenders, or at least some lenders, will want 3 years worth of books, or at least two. So if you've got less than that, then it really does affect your chances of, well, not chances, but who you can use. So some lenders will want 3 years, some will most probably want two. If you've got less than 2 years accounts, there are still lenders out there, but again, you've got to know who to approach, and sort of really how to approach it. Another question I get really common is, can a lender use a projection on income? So there's a really complicated answer to that. As a general rule, the answer is no, but sometimes it is something that they can look at. So that a projection, by the way, is where you've gone to your accountant and you've already given your books in. So for example, now we're in May, and your books won't actually be due to be filed if you're self-employed, so there's no limited company, until January next year. So you could effectively file them now, but you've got until January. If they're already with the accountant, then your accountant could, in theory, give you a projection of what they think you're going to earn over the next period. And in some instances, we will ask you for that, but it's generally not a huge requirement. Okay, so requirements for self-employed individuals. You will need to provide the SA 302s or tax calculation. So this is basically where you've declared your income to the HMRC, and they give you a document, almost like a little statement thing, on to show you how much you've earned and what tax is due on that. It's sometimes called an SA 302, or you can now download these online if you've got access to your tax account, and it's called a tax calculation. I've got another video on documentation. If you want to see what those look like, have a check of the YouTube channel. It shows you some examples and things on there of what they actually look like. But in a nutshell, what we're looking for is the net income. What have you made during that period? And that's different to your turnover. So a question I've had a couple of times recently is, I'm getting 60, 70, 80,000 pounds into this business. Can I use that, as an income? Well, that depends on what expenses that you're declaring. So if you're a builder, for example, and you need to buy tools or materials or anything like that, then that will come out before you have to declare your profit as such to HMRC. So once you've declared your profit, then that's the income that we'll use. So if you've, say, turned over or brought into the company £80,000, but you've offset £50,000 in expenses, we can only use £30,000 of your income. And so that's something to bear in mind, obviously, when you're coming to file your returns, if a mortgage is something that you're obviously planning to do. And this is where it comes to the importance of financial records and tax returns. Make sure that you've got all of your receipts and everything up to date and ready to put into your accountant. If you're running through a limited company, sometimes we can look at these slightly differently. So limited companies are kind of their own legal entity. I'm sure you know that by now. And we can occasionally, if you are leaving some money in the company, so you're not taking everything out of it, we can sometimes take that into consideration. So not just your own personal income. So again, have a chat with a mortgage broker. They can obviously go through and let you know the best way of applying. Self-employed mortgages are viewed by different lenders in different ways. So if we were going to be looking at a limited company, for example, then actually maybe one lender may be better to approach rather than another, and exactly the same the other way around. So just the importance of this is to be upfront and so we know exactly what it is that you've got and how you're structured, and then we can look at the best way of obviously making that application for you. Okay, so navigating the mortgage process. Obviously, if you're using a broker, then we'll obviously talk you through this. But if you're going to be doing this yourself, then there are additional challenges that you're going to come across along the way. You may be asked to explain things, for example, especially when you first start out, you may have sort of business leases in your own personal name, say vans or cars or whatever. And sometimes the best way, if that is actually coming out as a business expense, then the lender can sometimes ignore that as an outgoing. And again, you need to understand and work with your accountant of the best way to prove that actually goes out as a business expense. That's just an example. There are other additional challenges along the way, but it does depend on how your business is structured. So that will vary depending on your own sort of your own circumstances. Strategies for improving your chances of approval. It's basically try and get everything in line before you make the submission. The quicker you can answer a lender's question and in the most robust way possible, the better your chances of approval. If you take a long time to answer a question or don't answer it fully or give an answer that's not quite what the lender's looking for, it usually leads to further questions. So the more robust you are before you make that application, the better you'll be. And that's things like getting your documents in line, making sure that you've got all of your SA 302s and tax calculations. And the other thing you'll need to go alongside that is something called tax overviews. Again, check out my other video. It'll tell you exactly what you need. If there is anything that you're looking to offset, so if you've got something in your personal name, so like a car lease or something, have proof of it. Get that before you submit anything to the lender, because you've got a far better chance of them asking less questions the more you're sort of prepared for these questions. The other way you can improve your chances, of course, saving for a bigger deposit. This is the obvious one. Then right now you can get 100% mortgage, as in like today. That doesn't mean it'll last forever. It probably won't last forever. But either way, the bigger the deposit you've got, the lower the risk you're going to be to the lender. So if you've got a 5% deposit right now and you can get to a 10% deposit, you're lowering your risk to that lender. The lower your risk, the lower your credit score needs to be in order to qualify for it. And at that point, you actually start to get better sort of affordability as well, where a lender, if you're putting down, let's just make something up and say you're going to put half down of 50% of the purchase price, then you're going to be in a far better position to be able to borrow that little bit more because there's less risk there for the lender. So the less risky you can be with to the lender, the more chance of A, getting it approved in the first place, or B, getting the loan amount that you're looking for. Improving your credit score, again, making sure that you've made all of your payments on time, all of your loans are up to date, all that type of stuff. And if you haven't got any credit, then getting some credit is a really good idea. And what I mean by this is not getting a credit card and paying any interest or anything on it, but get a small credit card, £500-600 credit limit, put some shopping on it, pay it off every month. Make sure you set up a direct debit to clear the balance at the end of every month. You don't pay any interest, but it shows the lender that you are using credit and you understand how it works. That will improve your credit score on its own. Now, debt to income ratio is an interesting one. So this is how much debt have you got versus the income that you're receiving. And every lender's got a slightly different way of doing this, a slightly different percentage, but it's basically worked out as a percentage. If you have got, if you look at your monthly income as an example, let's say you're getting £2,000 a month and you're spending £1,500 on debt, that debt to income ratio is quite high. So probably 75% on the top of my head. And that's probably not going to look great because there's no real room there for any extra debt. By the time you add on cost of living and, just keeping the house running on a monthly basis, then you're going to run into issues straight away. The lower that you can keep that debt to income ratio, the better. So if you are only sort of borrowing, let's say £200 and you're receiving sort of £2,500 a month, that debt to income ratio is probably really where you need to be if you want the highest score in order to pass. So if you can reduce your debt down before you make an application for a mortgage, that is definitely going to improve your chances of getting approved. So the role of a mortgage broker, I'll keep this brief. We can do all of this for you. That's essentially what it is. Any mortgage broker that's got any sort of experience within the self-employed world will be able to know the best way of applying for a mortgage, what documentation that you're going to need, what lenders sort of like self-employed, what lenders don't, the types of questions they're going to ask, and have a far better idea and be able to put you in a position where you can get approved first time. So the obvious things is going to be things like time. I spend a lot of time on hold to lenders. It's exciting, I know. But if you want somebody to be doing that for you, then that's what a mortgage broker can do. And we make sure that obviously things are picked up on time. We make sure the solicitors are doing what they should be doing, because you'd be surprised how often that doesn't happen. So it's having somebody on your side to get you through the entire process. And that's whether it's a purchase, a remortgage, a buy-to-let, anything. A mortgage broker sort of comes into their own then, really. Now, I dropped this in here because accountants can be the bane of my life. They're either our best friends or our worst enemies. That tends to be where they are. Because if we do need anything from an accountant, then they kind of need to know what they're doing and how to word stuff in order to help you get the best chance of approval. So make sure you've got a good accountant. Make sure they've got really good recommendations. They do need to be registered with an industry body. There's a few of them around. If you're going to be doing this yourself, that's not impossible. Or if you're going to be using a bookkeeper, for example, who's not sort of registered with an industry body, that's not impossible. It does depend on what lender you go into. Some lenders prefer you to be with someone, and certainly the evidence that we require is different. So again, depending on the lender you're using, it's worth having a chat with them to see, give them your circumstances, what documentation you're going to need, and have a really good think of whether that's documentation that you can actually provide. Questions from lenders. Now, this is a brilliant one because we do get some really random and bizarre questions from lenders. So this is something that you should prepare yourself for. And this is about being honest, being upfront, but only answering the question. So The best way of describing this is when we get questions from lenders, sometimes we will have to ask clients because we don't know the answer. We'll get a very long story of, why something's happened or whatever. We need to condense that down and just answer the lender's question. That's really important. They don't need the sort of fluff around it. They don't, because that can sometimes lead to further questions and then further issues and possibly declines. If they've asked you a question, answer it directly in the most direct way that you possibly can do. If you're doing this yourself, this is obviously you need to make sure you do your research, understand what the requirements are. There's a lot of criteria and things which are now available on lenders' websites. Obviously, it's not the same as the full criteria that mortgage brokers have got access to. But if you are looking to do this yourself, make sure that it's not just about picking the best rate. Often, it's not really a game of rate. It is, what is the best rate with the lender that I'll actually qualify with? Because what you don't want to do is to pick a rate and then have to wait to speak to a mortgage broker with that particular lender, because that takes time. And then you get all the way down the application process and you get declined for something that we probably knew from day one. So make sure you do your research, make sure you understand the lender's criteria and what you can actually provide in order to give you the best chance of getting everything through. I try and leave this in with most things. This is to do with fees, and this is regarding anything in life, really. You can have something good, you can have something cheap, but you probably can't have something fast. You can have something cheap and fast, but it's probably not very good. And this is regarding anything. And mortgage brokers are exactly the same. You can only have two of those three options, and you kind of need to choose where you want to be. Obviously, the cheapest way to get a mortgage is to do it yourself, but it may not be very good and it may not be very fast. It just depends on what you need. So just consider that when you're making an application. And for now, that's it. So hopefully that answers all of your questions when it comes to self-employed mortgages. If you have got anything that I haven't covered, drop them in the comments below and I'll do my very best to answer them, and maybe even drop another video on that subject. For now, I'll speak to you soon.